Today looked quite difficult for the markets, and things looked particularly ugly right from the opening bell. The Nasdaq finished lower, semiconductor stocks got hit again, energy stocks sold off sharply, and yet the market may have been sending a very different message. Because underneath the headlines, investors didn't appear to be running from stocks. They appeared to be repositioning. And one company sat right at the center of it all, Micron Technology. The Dow finished modestly higher while the S&P 500 and Nasdaq ended the day lower. At first glance, it looked like another difficult session for technology. But market leadership was far more nuanced than the major indexes suggested. Several non-technology sectors showed resilience throughout the session. And that's usually not what happens when investors are panicking. It's often what happens when they're rotating. Everything revolved around one company today, Micron Technology. Shares of Micron fell roughly 3 to 4% ahead of earnings, while fellow memory company SanDisk fell more than 3%. Several semiconductor stocks, including AMD, also traded lower. Why? Because Micron has become much more than a memory company. Increasingly, investors view it as one of the market's most important indicators of artificial intelligence infrastructure spending. According to FactSet estimates, Wall Street was expecting adjusted earnings per share of approximately $20.83, revenue of approximately $35.75 billion. But the market wasn't simply waiting for earnings, it was waiting for answers. Is demand for AI memory still exploding? Are cloud giants like Amazon, Microsoft, and Google still spending aggressively? Does supply remain constrained? And perhaps most importantly, does management still see strong demand extending into 2027? Because right now, Micron's earnings report is being treated as a referendum on the AI trade itself. Today's weakness followed Tuesday's semiconductor rout. The VanEck Semiconductor ETF, ticker SMH, fell approximately 7% during the previous session. That kind of move isn't necessarily telling us that artificial intelligence is slowing. It may be telling us something else. Expectations have become enormous. After one of the biggest rallies in semiconductor history, investors now expect exceptional results from nearly every major AI company. And when expectations get that high, even great news sometimes isn't enough. As one market strategist described it, this pullback appears more like a recalibration of expectations than a fundamental breakdown in the technology trade. And that's a very important distinction. Then came another major development. Oil prices collapsed. Brent crude traded around $74 per barrel. West Texas Intermediate crude traded around $70 per barrel. The move hit energy stocks hard. ExxonMobil and Chevron each declined more than 2%, while weakness spread across the broader energy sector. But falling oil prices don't only matter to energy companies. Lower energy prices can reduce transportation costs, ease inflation pressures, and potentially improve conditions for businesses and consumers throughout the economy. Sometimes falling oil prices act like a tailwind for everything else. Then there was another development that many investors may have missed. The benchmark 10-year Treasury yield fell to approximately 4.40%. Normally, that's considered constructive for equities. Lower yields generally support valuations by reducing discount rates and easing financial conditions. And that's what made today's session so fascinating. Even with lower yields, even with sharply lower oil prices, semiconductor stocks still struggled. That tells us something. The market's issue right now may not be interest rates. The market's issue may be expectations. And this may have been the most important story of the entire day. Outside of semiconductors, several areas of the market showed resilience. Selected industrial, consumer-oriented, and cyclical stocks outperformed. Some investors may interpret recent trading as evidence that capital is broadening beyond chip designers and software companies and toward businesses involved in building the physical infrastructure that artificial intelligence requires. Because AI isn't just about chips. Artificial intelligence requires massive data center construction, gigawatts of electricity, electrical equipment, networking systems, and cooling technologies, industrial materials and construction services. The next phase of the AI story may involve far more than semiconductors. It may involve the companies building everything those chips need to operate. It's too early to say a lasting market rotation is underway, but today's trading suggested investors are beginning to ask a different question. Not simply who makes the chips, but also who builds the world those chips require. Alphabet also remained in focus after S&P Dow Jones Indices announced that the company will replace Verizon Communications in the Dow Jones Industrial Average before trading begins on June 29th. The announcement serves as another reminder of technology's growing influence within America's major stock indexes. So what was today's real message? On the surface, the Nasdaq fell. Semiconductor stocks remained under pressure. Energy stocks sold off sharply. But underneath, oil prices declined significantly. Treasury yields moved lower. The Dow finished higher. Several non-technology sectors showed resilience. Investors continued looking for opportunities tied to long-term AI capital spending. Today's session may not have been about investors abandoning artificial intelligence. It may have been about investors recalibrating expectations and beginning to look beyond the first winners of the AI boom, because the next chapter of artificial intelligence may not be defined solely by who designs the chips. It may also be defined by who builds the infrastructure that makes artificial intelligence possible. And after the closing bell, one company had the opportunity to answer whether that build-out remains as strong as investors believe: Micron. And with expectations this high, its commentary could shape market sentiment well beyond tomorrow's opening bell. This video is for informational and educational purposes only and should not be considered financial, investment, legal, or tax advice. Always conduct your own research before making investment decisions.